All right, welcome in everybody. It's already 20 of you on here. Awesome. We already have some questions in the chat too. So this is going to be I think it's going to be a pretty jam-packed AI circle. I know we missed a couple weeks ago as well. So I'll just start off with this. Any questions at the top of your guys' minds, feel free to put them in the chat now. There's been a lot going on in the market that we'll probably discuss here, and I don't want any questions saved for the last second that we might not be able to get to today. So first off, welcome in everyone. Let's get Kelly here, and then I'll go through the disclosures and such, and we can jump right into it, Kelly.
Oh, joy.
Oh, joy. I know you have a lot on your mind. A lot of opinions. How about that? iFlip Investor Inc. and iFlip Financial Services are not financial advisors and do not make buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk. You should speak with your CPA or financial representative to ensure that the iFlip Smartfolios you select are suitable for your investment profile before trading in a live brokerage account. With that being said, this is the limited agenda for the day. We'll go through the market update. I can't think of a ton of trades we've made, but of course, after the market update, we'll do the Q&A and then give away an Amazon gift card at the end. So there's my, I don't know, minute-long spiel or so. Kelly, I don't know if you want to say anything to start with or you want to just get into screen share, but I guess the world is your oyster and you can take the reins here.
Thank you, everybody. The only thing before we jump into it is I'm sorry I missed 2 weeks ago. I was busy on other errands, and it's just something I just couldn't make. And we try to be consistent with these AI circles every 2 weeks. However, sometimes there's things outside of our control. And I think I'm going to be traveling somewhere in March. So I think I'm going to miss an AI circle as well at that time as well, somewhere in the middle, towards the end of March. So forgive me in advance, and let's move into it.
Let's do it. Your screen is up, so go ahead.
All right, everyone. Look, I'm gonna go through the markets as I usually do, and I'll opine as I usually do, and try to get an idea of so everybody understands where our smartfolios are relative to the market, because that's really what it always boils down to. It always is an issue between performance, and the performance measurement benchmark is always going to be the S&P 500, and trying to have collections of symbols using science that are able to best achieve that benchmark, as well as minimize the risk simultaneously. So that's what our goals are. I hopefully everybody that comes onto the iFlip platform is trying to achieve that exact same goal through science. We're going to have to start off, I think, obviously with NVIDIA. For those of you who do not follow the markets with the minute, granular way that maybe I do, today's trading was all about NVIDIA. What were the earnings going to be after hours? There was a thought to say that if we didn't blow away previous earnings numbers, the market would go down hard, and the NVIDIA would go down hard. And if the markets, if they came in short of expectations, the market would also go down. Well, here's what ended up happening. The information came out. Yes, NVIDIA beat estimates, but there was nothing overwhelming about their go-forward outlook. There is still some information being disseminated right now from the earnings call. The earnings call started before around 4:30 Eastern time, and it is now an hour later. And the way the market is trading NVIDIA after the close is just $2 higher. Generally, on an earnings date, if you look back historically, there's always been big moves. Here's a previous earnings date here where they came in and we had a jump the day of and the day after. You can always see earnings date because there's generally a big jumps. Like here was one, Here was a previous one. Again, these earnings create these little gaps higher, and then has follow through movement. And the real issue with NVIDIA and how it affects the entire market is this has become the bellwether. This new stock, which is part of the Magnificent Seven, which has now replaced FANG, is now the real go-to stock for where the future of computing and artificial intelligence is going. No blowaway earnings. What does that mean for the markets tomorrow? Well, to me, it means that the markets are probably going, that maybe NVIDIA is up a little bit. Maybe that's a sigh of relief to the market because nothing crazy took place, and that the market will hopefully stabilize in here and move higher. But only time will tell. And guess what? It is only about 22 hours away. So the Dow Jones today was just down 188 points, not even 0.5%. But let's keep context, everybody. The high of the Dow Jones was 44,800 area. We're only 1,400 points below that. It doesn't take really a rocket science to figure out that's just 3% off the all-time highs. The Spider, very similarly, all-time high was around 61.29. We're basically at 59.50, about 175 points off the all-time high. Again, 3%. And the same is true. Look at the Nasdaq. Oh, a little bit more. It was around 20,000 or so. Now it's 19,000. So 1/20th. Okay, that's about 5%. Makes sense. Nasdaq's always a little more volatile than the rest of the market. But you can't look at a 5% correction and say that we're in a bear market. That takes a 10% correction. So right now, the markets are just waffling out. And a lot of this is due to the understanding of where NVIDIA was going to go. The market feels heavy to me, for what that's worth. It feels to me like it needs some kind of catalyst to move higher. I don't sense what it is right now. That being said, this is just my opinion. The market does feel heavy. And if we look directly at the Mag 7, we should. The only real performer over the last week has been Apple. Apple's the only one that's gone up. But if we look at all the other Mag 7s, they have had, very real corrections from 205 on Google to 175. So that's about a 12% correction. Meta, kind of similar, an 8%. On Amazon, more like it looks 240 to 215. So about 25, basically 10%. Microsoft, of course, even a little worse. Again, 10%. Netflix, around, just not even much at all, maybe another 10%, 8%. And NVIDIA, its all-time highs around 150 area, 130 area. So again, about 12%. It was a little worse. So the Mag 7 has been definitely the most affected. But keep in mind, it's only 10% off its highs. And given the growth we've seen over the last number of years, that's nothing. That's just nothing. It's not anything to really concern yourself about, other than the fact that overall we do need some kind of a catalyst, I feel, to make the market go higher. That being said, where else do you put your money? Let's take a look at the usual suspects, the bond market. Here's the 10-year note. Interest rates have definitely come down over the last week. They moved from about 4.55 on the 10-year note all the way down to about 4.2. That's a big move in the dollar. The dollar is definitely off of its highs from about 110 to 106. So about a 5.5% correction here. This is, again, the normal range for a currency market. The currency markets generally stay in ranges. That's what international sovereignties want. They want to keep their markets in a range-bound place so that they can trade together and understand what the values of their goods and services are being offered at overseas. So that's really an important thing to note. It's in a range-bound market, and nothing really is significant here yet. The oil market, again, it's been range bound. We've been in this area here literally since 2022, where oil prices have been around $75, $76 a barrel. Right now we're at 68, generally the lower part of our range. So oil isn't really, it's a little bit at the lower part of our range. We would expect that under a Trump administration, knowing that they're trying to bring the price of crude oil down. So therefore the distilled products are going to be cheaper as a anti-inflationary measure to try to keep our inflation down and bring down costs over time. All Plains American and Energy Transfer, we have to always look at these. These have been the main stocks inside of the conservative portfolio, and they also have presence in the aggressive as well as the balanced, smaller presences, albeit. And not to mention red oil, where they have a very large presence. But again, these are markets that have performed very well under the science, because there's really no science to apply. It hasn't even needed it because of just the nature of this slow grind higher, paying huge dividends. The Trump thing, of course, the Trump election, of course, made the markets move a great deal higher. But if we just look at Energy Transfer, it hit a high of 21. It's now at 19.20, but it keeps paying the dividend. It's going to be really hard to throw this off. And now we're starting to see more analysts like it. The call from most analysts is between $22 and $23 a share. And I definitely feel it'll go there sometime this year. All Plains American, very, very similar. Look at the chart pattern. It's almost identical at Energy Transfer. All Plains American, they look the same, maybe a little bit more volatile here. But either way, all-time high around 21. We're sitting at 20. And so, again, these stocks definitely look attractive. They still pay their high dividends. And we want to own these things if we can. And the science says we should own it. My personal opinion is we should own it. And I think most people that look at this kind of feel they should own it. Energy sector is generally a good place to be. Science really works well here. And we generally love the application of how it works on these, bellwether stocks, at least in our portfolios. We can go into this, a few other things. The banking stocks have still performed well. They're a little bit off their highs. There's JP Morgan, Bank of America. They've done well. Take a look at Charles Schwab, kind of closing in on some highs it made back in, where was this? Back in 2022, 2023. Fannie Mae, which we really follow quite a bit nowadays. Again, it's a stock that was $2. Now it's $6 a share. Why? Because these are government-owned entities, and these are the way the government allows banks to create mortgages for people. And again, under a Trump administration, these things look more attractive as, again, this new administration is trying to tackle all kinds of issues that were apparently very difficult for the previous administration to address. We'll go down the list a little bit more. Here's a stock that a lot of us know. It's called CrowdStrike. Again, it's a volatile stock, but it recently had made some highs. They're kind of outrageous. We had the big scare where there was the breach of data. Remember, this is a company that does data integrity and make sure you don't get hacked. Well, a company that they help not get hacked, well, they got hacked, and the stock went from almost 400 a share all the way down to 220. It worked out that the market came all the way back. What a beautiful low that was to buy. Now it's just gone. It was going crazy. It went all the way up to around 450 a share, and just recently it dropped down to 394. Call it 400. So it's off about 12%. It's off its highs. But to me, this, again, given the nature of data integrity on a go-forward basis, this is a good stock to own. And we do have science on it that allows us to own it and manage its risk. So again, it's a stock that's been hurt, but it still looks good to me. We'll move to Digital Realty Trust. This is a data center REIT. So essentially, when data centers build on land, generally they have to pay rent. They may not own the land, but they put it in a strategic place. The land is leased for like 100 years, and they know they're going to get royalties. This stock has been devastated. Why? A lot of this was DeepSeek, sorry. That was about a month ago, came out, and it has just hurt it, the same as it did NVIDIA for that recent period of time. Again, this is a stock that I think really looks good. It's in the new Vector portfolio, although albeit it has been hit literally for about 22% over the last, since, beginning of 2025, it's down about 15%. But again, these are good stocks to own. I think, again, if we are moving towards a new world of more cloud computing and more data centers, more AI. Landbridge, another company like that we like. It's something, again, part of the Vector portfolio. It's sitting at support right here. Just a few days ago, it was at 75. A few days later, it's at 65. Accept this volatility for a stock that probably could double or triple in the years to come. That's why we own it. We'll switch over quickly to Masabi Trust. Again, this is a mineral company. There's only 3 people that work in this company, but yet it is exchange traded. We kind of want to own it. Why? It pays a dividend, although they said the new dividend won't be paid. Well, that might mean that's fine. May not own it we're not owning it for the dividend, although that's nice. But recently it paid a $6 royalty from $36 a share. It paid a royalty of $6 a share to everybody. Anybody that owns it, look in your account and make sure you got that dividend. It's hefty. Matter of fact, one of the largest I've ever seen. Literally 16% of the value of the company at the time they offered the dividend. And it's already all the way, went down more than a dividend. That's called a dislocation. Obviously, it was a buy, and it got up. It's now sitting at the price of about $30 a share, which is exactly where it was prior to the dividend. So again, this is another stock that looks really positive going forward. Planeteer, we'll jump over to that real quick. Again, another company, data center orientated, software to be able to manage the use of these kind of large technology and AI products, where you have these large model computers that need to be tied together. Well, somebody has to write the software for that. That's Planeteer. This has been a company that we were interested in the low 40s, and we got it. It's ran way up, obviously, up almost 300% from those areas. But from 120, it took a dive of $30 a share, which is about a 25% quick correction, literally over a 5-day period. And a lot of this was due to, the fear of the NVIDIA earnings. And now that bag is out, and there's been no change to the NVIDIA stock as at least of 15 minutes ago, only up $2 a share after the earnings were out. Texas Pacific, another company like Landbridge, again, another company that I particularly like. We use science on it. The science is excellent here. Again, it's a stock that has, I think, a lot of potential on a go-forward basis. And they're going to pay a little tiny dividend coming up in the next few days, but it's meaningless. It's not about the dividend here. It's about the growth. Finally, we'll get over to Bitcoin. Now, here is the story, I guess, folks. I'm going to look at it in terms of the price of the IBIT. IBIT is the proxy for Bitcoin. I always kind of keep the idea that a price of about $54.50 represents $95,000 Bitcoin. And right now, it is, as everybody's seen, Bitcoin has been hit down to like 85,000 from the 95,000. So therefore, IBIT is down to about $48 a share. It's given away essentially the Trump rally of Bitcoin. I think it is an extraordinary buy in here, but time will tell. If you believe in the Bitcoin story over time, then this is an incredible buy opportunity. However, if you believe as you come into summer Bitcoin has these seasonal trends. We'll see if there's some seasonal trend here that says we shouldn't own it for a while. Right now, if I'm just a long-term holder of it, I do nothing. And if I'm a believer in it, I think of this as a buying opportunity for whatever that's worth. Let's take a look. Interesting things. Some very boring things have gone to new highs. Here's AT&T. Telecommunications have done outrageously good after languishing for years. It languished for years and years, all the way down to $14 a share. But when they sold the DirecTV, actually things got much better for them. They also recently retired a bond or a note that was also held in the conservative portfolio, where they called it in early. It was a 5.25% note. I loved that note. We no longer have it, but they paid it back early. So we have a little windfall in there, and it has to be, it's already been replaced with a similar symbol. But I expect the same thing to happen with as well. These are notes that AT&T uses to raise capital to improve future infrastructure and capacity. And the same is true of Verizon. Again, a stock that really has done nothing but go down and languish, but it does seem to be, moving back towards its more recent highs. And so, again, these are stocks that pay very good dividends, both AT&T and Verizon, 4.5% areas. I'll take that. It's actually now 5, I think, here coming in on horizon. The most recent one I see was 67 cents a share, and just call it at $40 a share. So that's $1.30, $2.60 on 40. So again, that's about 5.1% or so, quick math. So there's a recap on the markets. Let's see, 350. I think we'll just leave it at that for here and move right into some Q&A for everyone.
Perfect.
Lee?
No, sorry. It just took a second to get myself back on here. A lot of statements and questions in the chat. Let's start with... let's go all the way to the top. I'm going to take your screen away and we can use it again if we need it. So I'll start with John. I answered the first one, I believe. I didn't see this. You may have. He said he noticed in BitFlip that it was totally out for a short period of time.
Yep.
Oh, and I'm sorry, your camera's frozen, Kelly.
I know I'm unfreezing it as we speak. I have to periodically check to see how I'm always frozen with a very blank look on my face.
John, you're under the right impression, though. You should always be 50% in, and then the other half would be managed by the AI. Kelly, was there a reason that it maybe was 100% out?
Well, as you saw that Bitcoin has moved down, is one of the recent charts I just put up. Bitcoin moves down, we're not going to be in the stock. We need Bitcoin to rally and have momentum in order for the science to be able to buy Bitcoin on the way up. So don't look for any kind of recent value buys inside the BitFlip portfolio, because that's not how it works. The way it works is it will stay in. If we're in a bear market for Bitcoin, you will not see anything else. You will not see buying. You will just own half a position. If you see a movement towards higher prices on a short-term basis, because it's not a long-term model, it's a short-term model that looks for momentum, on upward side momentum, and then it tries to buy the momentum and then capture a quick profit, get out, and then try it again. It is a momentum-based model, and that is the way it will own a double portion, which means it'll be 100% long. So right now, we all know Bitcoin has been hurt. It's gone down about 13% from the basic price of around 95 recently. And as a result of that, we should be only in a half position, and look for a longer position if we were to move back up towards $95,000 a coin.
Yep. I think John was saying something slightly different, but that's good for anyone who hasn't seen BitFlip yet, that it's designed to have the AI manage half of it. have buy and hold for the other half. The next one from Dave. Dave, I have my email in the chat, a couple messages under yours, the Lee at iFlip Invest. If you just want to reach out to me, I can even get you my calendar link. I'm happy to chat about the system. How do we deposit? So it depends on the account type. Almost all of them, you can link up your bank account and just do an ACH over. I would say the same thing goes for you. And sorry, I'm not going to butcher your name there. But just reach out to me. I'm happy to help you if you have any questions on the account. From Zung, you kind of talked about this in your market update, but I'll let you read it and give any comments that you'd like on his questions about certain stocks and entry into the market, I guess.
Which one is? I don't.
Sorry,
particular question on
I thought you could see it. He said, "Is now a good time to get in the market buying cheap? What to buy? Nvidia, Broadcom, the Mags, iBit, or something else?" You kind of gave some opinion on a few of them that you really liked right now, but I don't know if you want to comment on any of these in particular.
Again, so the AI circle is our little area where we've disclaimed, and it's really important to note this, we disclaim the fact that we're not advisors. Only an advisor, a fiduciary, which is what an advisor is, can give you advice and admonishment about if something is a good investment for you. However, when we're on the AI circle, I'm allowed to opine. And generally speaking, when the way it works for iFlip is we look at a huge basket of stocks. A lot of those stocks, all of those stocks, we apply science to. Sometimes science can make neither head nor tail on a symbol, which means, well, it may be a great stock, it may not be a great stock, but if we can't apply science to it so that the symbol can be managed automatically, then we don't own it. We don't own it. Doesn't mean it can't be owned. So in all of our cases right now, we are still long a lot of the stocks I talked about. So if we were to go to a particular example, as a trader, I would own Landbridge and Texas Pacific Land right now. I like the prices. I like Digital Realty Trust. You can buy them, of course, if you buy the Vector portfolio, you will be buying those stocks at the current price right now. So that's an easy way to get it through a Smartfolio. The Mag 7 stocks, though, again, they're down approximately 10% in aggregate for the year on those Mag 7s. And they've had huge run-ups. And also, but as I mentioned earlier, there's the tailwind is that we have an administration that wants to promote business, but the headwind is what is going to be the catalyst to own those Mag 7 stocks, for example. I'm not really sure what it is. And so I would prefer, if as a trader, to pick the things that have fallen further off their highs, that have less to do with technology. Let that sort itself out all the way through the end of this quarter and perhaps the next quarter as well. Let that sort itself out. Buy things that have discounted that we know we kind of need. And I'll give you an example, CrowdStrike. It's off only about 10%, but over time, it is a stock that just has relative value. Planeteer is another stock that has just great relative value in many different aspects going forward, and they're not considered Mag 7. So yeah, I guess we have had a correction. Buying the dip has worked. The question is, are we done with the dip? Tomorrow will tell us a lot, I have to admit. The Nvidia earnings didn't come out to destroy the world so far, so I suspect the market will be steady tomorrow, maybe a little higher. But yeah, it's not about the market anymore. It's about individual stock picking. If you're an advisor, then there's nothing really to say. But if I'm just opining, I would own some of the stocks that I've already looked at and talked about earlier in this AI circle.
Cool. I'm going to jump to the bottom of the most recent question. I think it's a valid time to bring it up, and it's something I was going to maybe even ask. So So, and I'll add something to this as well, but basically Eddie was asking how you feel about the Vector portfolio so far. So of course, like, it's very new. Some people got in right when it was created. Some people got in as recently as a couple weeks ago and have seen nothing but the down. I guess my point being is, in my opinion, this portfolio seems like something designed for a couple years out, almost, maybe not for in 2 years, but for the next few years. So with all that being said, like, the entry, of course, in the short term, you might have a terrible experience so far or a great experience, I guess. But I guess the point I'm trying to make is, I still feel as much conviction as when you built it, even though it's down a little bit in the last couple weeks.
That's a great question, actually. When we create portfolios, generally it's a science is the thing that creates them, but the the when the science that creates them is finding, again, what are the stocks that are ownable, that works really well on the algorithms or machine learning we use. And when we find those, then we put those into buckets. Those buckets represent various degrees of risk. In the case of the Vector portfolio, personally, of course, I have the same conviction. But if you think about what the Vector portfolio was, it was a concept that was a Trump-based portfolio. In other words, a new administration came in and it gave signals. So for us, again, not being advisors, what we can do is say, okay, we can segregate the science to say, science, look at the things that, follow these kind of descriptions, which are data centers, and aggregate them like that. So when you aggregate stocks based on a concept like cheaper energy prices or making more steel factories in this country, then if you hear that, you should, own those stocks. But if that's not enough for us, we want to apply a science to it to manage the risk going forward. Yeah, I feel the Vector portfolio will be volatile. There has been a big challenge to data centers recently with the DeepSeek product that came out about a month ago. And most people and pundits have literally dismissed the idea that DeepSeek is really this kind of new all way of doing AI in a much more efficient, cheaper way. And it's just like America is a country, at least, again, I'm opining, that wants to build the biggest and the best and is willing to pay for it. And that's one of the reasons why we have a great military. That's one of the reasons why, we have, the top-notch scientists, and generally technology stems from this country. But that doesn't mean that other people aren't capable of finding better routes to do the same thing. We saw that in many instances after World War II with car manufacturing in Japan. So my thinking is that I still believe that the go forward future for the world is something that will use AI in a greater and greater abundancy. We will see it more and more in everyday life, and all the things around it will prosper. Very similar to when the country was born. What is one of the first things you need? Well, the first thing is cement. The next thing turned out to be steel. And after steel, then you have cars. Cars are an application of steel. Similar things here are true of Vector and that kind of a portfolio, which is designed around data centers. So a challenge to a data centers and the growth of a technology like that will affect the Vector portfolio. But if you believe in the long run aspects of that, and you believe the science can predict most of the volatility associated with portfolios that could triple in value, then you have to understand, if you're going to triple, if something can triple over a few years, then it's going to have volatility throughout the whole number of years. So yes, at a personal level, I have conviction, but at a more deeper level, I believe the science behind it is very powerful. manage the risk going forward of all the stocks inside the Vector portfolio.
Perfect. We'll jump back up. Simple one. Yes, Dave, the Smartfolios do pay dividends. I would say like the conservative has the most amount of stocks that pay dividends in it. Balanced has a handful as well. The whole red oil Smartfolio pays a dividend. So yeah, I would say, what do you think? At least half the different Smartfolio options have something that pay a dividend, maybe even more than that.
Yeah, again, just exactly the order you pointed out, Lee. Conservative portfolio, of course, is going to pay dividends. That's because conservative means let's try to grow. We're not as concerned about growth. We're more concerned about income. And if you're concerned about income, you need dividends.
Yep.
So red oil, of course, energy companies are the classic way to collect dividends. So obviously red oil is going to pay startlingly large dividends. Conservative portfolio does it in a different way because yes, it has oil products in there that pay dividends, but it has bond products as well. I mean, the TLT is in there, and I believe the AT&T bond, the TBB, is in there as well. The other one was also in there, but that was retired recently. You might have saw a little blip in your conservative portfolio if you owned it. So yes, but that doesn't mean that even the aggressive portfolio pays some dividend. After all, the S&P 500 itself pays like 1.7% dividend per year, and you will get dividends in absolutely every Smartfolio we have.
Perfect. Jumping around again. I think this is a fascinating question. I know I have my opinion on this. I'll let you answer it first. But Jim Tidmore asked, since there's so much overlapping stocks in the portfolios, does it make sense to have some in most or most invested in few? I take that as a little bit in a lot of portfolios, or a larger amount split into only a couple of portfolios. Of course, like Kelly said a handful of times so far, we can't advise on this sort of stuff, but I'd like to get your opinion on it, Kelly.
Well, first of all, there's a reason why there's an overlap in all of the portfolios. And again, it goes back to what I said actually earlier in this conversation. We look at the S&P 500 stocks plus maybe another couple of hundred stocks. We apply, as our science is, that we apply algorithms first. What are algorithms? The algorithm is a simple, old-fashioned thing that just says, let's establish that something we can own in a way we can manage the risk of owning it over a longer period of time. And we apply that kind of science because we can do that fast on a huge swath of stocks, like 700. But it always comes down to there's only about 50 stocks that kind of rise to the top. And when they rise to the top, that means that they do well under those kind of scientific approaches. And then of those 50 stocks, they can be broken down into many types of portfolios. Some of those stocks are oil stocks, which means they can go into the conservative portfolio because they're oil stocks and they pay dividends. Some of those are aggressive stocks, which means they can end up either in the balanced or the aggressive portfolio or the big tech portfolio. So that's why there's so much overlap. But if you look at those portfolios, even if there's a lot of overlap, the reason it's not about the overlap, it's about the beta that each one of those Smartfolios have. And the betas of our portfolios, most people don't know this, are very, very low. In other words, we can have an aggressive Smartfolio that has a beta that is less than 1. And for those who out there that know what that means, it basically is saying we don't have to risk more to make more. We have a way of doing it with this science to risk less and make the same or more. That is kind of it in a nutshell. And that probably requires a white paper one day or a video dedicated just to that.
Beta. So, like, to maybe give an example to that, last year the balanced portfolio, I think it marginally outperformed the S&P 500, but we barely owned the SPY ETF last year. I don't know the exact amount of days or months that we owned it, but a lot of the return came from the individual stocks in there. So, say we had 75% of the portfolio invested the whole year, we that portfolio returned about the same amount as a buy and hold of the S&P the whole year, where you're risking that whole dollar the whole year versus we were risking less and still kind of achieved the same return.
Yeah, that is exactly what I said. You just said it in a different way.
So good stuff. I liked this one as well. And we'll give you kind of like a 5-minute last call. Any last questions? Then we'll pick a winner here and wrap up in the next few minutes. I know we always get a surge of questions at the end. I don't want anyone to feel like we didn't get to them. So this last one said, Kelly, do you like or dislike S&P or Nasdaq covered call based funds that pay a dividend based on the covered call strategy?
And just so you know, that's a great question. Probably the winner tonight, because
Foreshadowing.
I am, in my career, one of the things I did was I did a lot of covered calls. I mean, I'm a believer of buy rights. A buy right is you buy a stock, you sell a call. And the idea of it was, if you did it right, is it just generated a little bit more income from owning the stock, where I didn't care if they took the stock away from me, because if they did, that means I made a greater profit than if I just held it. So in general, I'm investigating deeply because we can't trade options on the iFlip portfolio currently. I am investigating those stocks. There's like 4 of them that I really like. Let me quickly tell you what they are that I watch. And they are like the QYLDs, which is the I think that one's the Nasdaq. There's a Russell RYLD, Russell Yield. That's why they're YLDs. There's the Bitcoin YBTC one, and there's the what I can't the Round Hill one. I can't remember what it is that it is doing, but I'm following it. And here's the issue with those. These things are paying huge dividends. They're paying about 12% a year. And they're paying it monthly. It's basically working out to like a dollar a month on a $20 product. But the problem with it, if what I've seen so far, is Bitto, by the way, is another one. What I'm seeing is that they're decaying. And that is my fear. If we could make $1 a share per month, and because you might notice they're all priced around the same thing, between 16 and 20 for 2 of them, and the Bitcoin one and the Round Hill one are about 40. If you can pay that kind of money out on a year-over-year basis, and you don't move the price of the underlying ETF that does this, that's gold now. Where else are you? I do that all day. But I'm noticing a lot of decay in some of them. And what we have to be able to do is find a way to own these kind of things, because I really do like owning them. But it's almost like I would want to do a buy right against owning them in themselves. So I would like to be able to have a covered call on the covered call ETF. And that gets into some kind of crazy iteration. But these are things definitely worth exploring, but they're not for the faint of heart. And they could decay themselves into oblivion. So yes, you might continue to get dividends, but you might lose, more than half of the value of the product in doing so. So really, what have you achieved? That being said, look, I am studying these things heavily. And if I can find a way to be able to offer the product where I felt it was capable of protecting just the base price in any way, then honestly, everybody should come to iFlip to just buy that if we can do it. But I am looking at it heavily, and maybe there is a way. Generally, if you're the right financial engineer, and I'm not saying I am, there likely is a way to manage this kind of a product.
Cool. I saw a couple of kind of account related questions. I just put 2 links in the chat. One's my scheduling link that'll take you to my calendar. Happy to sit down with any of you guys and go over anything that's maybe outside of the scope of the AI circle. Also, I think it was Amy. It could have been someone else. Someone was asking how to set up an account. So that bottom link that says app.iflipinvest.com/create account will be where you'll start to set the account up. You can also use the scheduling link if you want me to walk you through it. There were 2 other questions I wanted to go over. One
Sure.
from either Jacqueline or Jacqueline. I'm sorry if I mispronunciated it. But she asked, is there a platform with iFlip to invest in blockchain? I don't know if she means like a Smartfolio for blockchain or maybe just investing into blockchain. But maybe however you're figuring this question or what it's asking, feel free to answer.
I think, look, the way I interpret the question is that there is no Smartfolio that is around blockchain yet. I mean, there are stocks that represent that. One of them is Riot, RIOT. However, that's been a losing cause stock for a while. Also, my study of the blockchain is over, even I just, for myself, about 2-3 years ago, I don't think blockchain is really the real end all here. And I think I've mentioned on previous conversations that blockchain, although it sounds very impressive and what it can do, and people use it, it's, for example, credit card companies don't use it. And you would think that would be the perfect kind of application for, right, large numbers of transactions, and they're all accountable. But why doesn't a credit card company use it? And it's not because they're afraid to change. It's because it doesn't scale as well as you think. And so that's one of the reasons why I haven't focused on that, and to put together a platform, a Smartfolio that essentially represents the blockchain itself. That doesn't mean I won't, but it does mean at some level, I'd have to see some compelling reason and some science of the individual symbols that represent blockchain use and application that haven't done anything but disappoint. So that's one of the reasons why I can't find it. When you run the science on it, they can't make money even on an algorithm. So if it can't make money on an algorithm, why would I spend the time and resources to apply machine learning to it? So that's part of the reason for the answer to that. It just isn't been a compelling case to date.
And then another one from Jim was curious about Apple being in the SPY Plus.
I saw that question too. To my knowledge, it's always been in the SPY Plus.
I think maybe in it, and I could be taking this out of context, but of course we have the SP 500 portfolio that only has the SPY, whereas SPY Plus has Apple also.
Correct. So conceptually, I think everybody knows what is the SPY Plus, where a previous version was called SPY Beta Kicker, which was like owning the S&P 500, Apple, and say Microsoft, I think it was. And the idea of that is that if you know nothing, if you know nothing, what do you invest in? And you should invest in the S&P 500 because that's the benchmark. The problem with the S&P 500 is it can be volatile, and you need to manage that volatility. However, but if you have a percentage ownership, say 70-30 or 80-20, where you own 80%, for example, of the S&P 500 and 20% of Apple. And Apple is a company that is ubiquitous. Everybody knows it as the S&P 500. And we know Apple has far outperformed the S&P 500 over the last 30 years. Why not just own most of the market and own just, some Apple? And generally that should outperform the S&P. And of course it does. That's the whole reason for it. And that's, the allocation is less important. It's, you have to have 10, 20, maybe 30% of Apple. But what's important there is you're owning things we all understand. They always go up, and we just want to manage the risk of it. So the SPY Plus is the product for if you don't know anything else and you're managing your own money, then why wouldn't you just click that and say, hey, I don't know any better. Let's just own the two most important things that represent the market. Apple is certainly an important thing, and the spider.
Cool. If you have a second for one last one, I think maybe other people are having this question as well because it's tax time. Tony asked, which Smartfolios should I avoid if I don't want to deal with K1 tax forms? My tax man was oblivious to what to do with them. I guess they're the pipeline stocks. So I know they do something different with the K1s versus a 1099.
Yes, they do. But your tax man should really wise up. I hate to say it to whoever that is, because K1s are, depending on the products. If you own an oil pipeline, those are, when you buy that product, for example, the K1 represents a return of capital in many cases, which means you're not going to get taxed on it through the K1. It's essentially a return of capital. So depending on that product, your tax man should know, there's a special box is to say, hey, wait a minute, I got this distribution back from owning All Plains American, and in many cases, it's not taxable. So having good tax accounting is extremely important. But that being said, there are all kinds of other stocks where, yes, you'll get paid a dividend from the stock, and it'll come in the form of a 1099. I think it's a 1099K, actually. And that one is taxable. It's like if you own the S&P 500, it would be, you get a dividend from it, but you'll get a 1099K, and most every accountant will understand what that means. That, hey, that's the distribution. It is taxable as income. So, but K1s are really desirable for most people. So I would really highly recommend looking into what the misunderstanding may be between your accountant and a K1.
So maybe Plains All American Energy Transfer. I'm trying to think of any others that might send a K1 that you might know off the top of your head.
No, generally it's those, because they are actually limited liability partnerships.
Yeah.
And because they're partnerships, they have to pay K1s.
Right.
Whereas in general, when you buy a stock, you're buying on the New York, or in the market, the Nasdaq or the New York Stock Exchange. You're buying a C Corp company, a company that has corp behind it. And corporations, when they pay dividends, those come in the form of a 1099K. But a limited liability partnership, which is what those pipelines are, they pay it in the form of a K1. That is the difference. You don't know that, though, when you're clicking to buy these things individually. But in general, that is what the difference is. And again, your accountant, obviously, I think should know that.
Cool. All right. Well, I think I know who your winner is, and sorry to keep you a little bit later than maybe anticipated, but was it the covered calls?
Yes, it is.
All right.
This is the reason for it. Again, is this is an area of interest for me, and because of that, you get the win. But the other reason is it's a great product if we can find a way to be able to offer on the Flip platform. It's really unique, and again, who would want to be able to own something that paid 10 or 12% a year with price stability?
Yep. So I'm assuming this is John. John, the instructions are on the screen as to how to claim your Amazon gift card. So just email us, mailbag@iflipinvest.com. And just include your account number in there, and that will pretty much be all that we need. But congratulations on knowing your audience and knowing the right question to ask Kelly to pick you as the winner. Any parting words, Kelly, or you good to go?
No, just again, I look forward to the next AI Circle in 2 weeks. Let's see. Again, the market's off to kind of an interesting rocky start. I'm not really shocked at it. The market's up about only 1%, 1.5% for the year so far, and we're coming to the end of the second month. It's definitely going to have volatility this year. The tariffs are not completely imposed yet, so we're looking for some volatility here. I think we'll hopefully stabilize sometime in the second quarter and hopefully march higher and have another good year.
Awesome. And with that being said, the next AI Circle scheduled for March 12th. The following one would be the 26th again, so a month from today. But like Kelly said, we're extremely busy this time of year with travel and such. So forgive us if we have to push one back in a week or something like that. But if nothing changes, we'll see everyone back here in 2 weeks. Enjoy the rest of your week. And thanks as always for tuning into the AI Circle.
Thanks, everyone. All the very best.
Take care, everyone.